The third reason we see existing businesses face financial challenges is around cost of doing business. So what is cost of doing business? Well, we've spoken a lot around, unawareness and then the cost of doing the project. That's all gross profit. That's not actually the support that it takes to run your business. That's the cost of doing business side of things. So cost of doing business are all the expenses you would incur regardless of how much or how little revenue you transacted. So think of all the things around you. Think of rent, think of electricity, think of computer expenses, accounting fees, marketing, sales, advertising, insurances. All those contribute to cost of doing business because they're not directly related to the delivery of the product. They are supporting the delivery of the product. So for example, direct costs, those that move up and down in sequence with how much or how little revenue you do, cost of doing business is relatively stagnant. Now, yes, as your business grows, your cost of doing business increases because you might go from a home office to a small office to multiple offices. They're all still costs of doing business. So let's look at an example. Let's say your cost of doing business each month is $100,000 and you have a business that does 40% gross profit on its products or service that it's delivering, but you're doing $150,000 worth of revenue. The maths of that don't work out. So you might have a good quality of performance, so quality being the GP percentage, but you're not having enough quantity of performance. So if you've got $150,000 worth of revenue at 40% GP, I think that equates to a $60,000 gross profit. So the quantity of the gross profit is not high enough to cover your cost of doing business of $100,000. Leaves you a loss of $40,000. That might seem painfully obvious, and you go, well, how on earth do you get to a position where you had $100,000 of doing business and only $150,000 of revenue and $60,000 worth of gross profit? Well, if it's any consolation, nobody actively seeks out achieving that objective. We're going to talk to you now about why and how that occurs. Let's look at some examples of how cost of doing business can hurt your business. Now, the picture you have in your mind might be, this happens when someone gets a new flash office in the CBD or downtown, or they buy their sales team Maseratis to drive around everywhere in excess and superfluous things that aren't really required. Well, in my personal experience and what you see in SMEs is you don't see that. It's more around when your business either stagnates or stops growing as aggressively as what it was, or even worst case, revenue contracts. That's where you see the cost of doing business starting to take a bite and risking the cash, the profitability and equity of the business. The reality is it's far easier to add costs when you are growing. Now, of course, that's the case. But then when you compare that to having to reduce costs when performance reflects that you need to reduce costs, it is much harder. You've got contracts, you might have a long-term lease, you might have a property where you've got 3 years still left on it. You can't easily get out of those commitments. You employ 5 new people and now you have to get rid of 3 of them. That is not an easy thing to do. So human nature is, as you grow and as you invest, you can make those decisions very, very quickly. But when things stagnate, you're telling your mind that you're in a sense failing because you're contracting in size relative to what you had been doing previously. So immediately there's a balking, there's a slowing down in those situations, which we have to confront and we have to deal with. And that shows itself through a higher cost of doing business relative to the performance being achieved today. So undoing those expenses is hard, but it's a necessary evil of the situation that we're in. One of the other elements of cost of doing business is when a business doesn't know what its break even is, or potentially even worse, it has an incorrect understanding of what their break even is. And your break even needs to include all your cost of doing business, all your debt repayments, all your drawings, all your tax obligations have to be included in that break even number. An example of someone we've worked with is when we started with them, we asked them, what is your break even per month? And they quoted a number, let's say it's $4. And when we did the calculation, it was actually closer to $5. And in a weird way, that actually relieved the business owner because he was like, oh, that explains why we're never getting ahead cash flow wise. And we feel like all these things are happening, e.g. marginally higher debt, increases in the amount of money they have to put into the business. But it was able to explain that situation to them. And then we put a plan in place to reduce that cost of doing business and also increase the output of the business as well. But that's not so much the point in this situation. The point is understanding what your break even is and making sure it's absolutely correct. Get your finance team to deliver you that number to make sure that that's going to help you progress to where you want to go and not go backwards as a result. What to do with cost of doing business? Firstly, make sure you know your break even every single month. And more to that, make sure it's accurate. Get that from your finance team. Ensure it includes tax, debt repayments, your drawings as an owner. Get a true break even, and we have other courses on the website around break even. Make sure you know what that number is. And the second element, tying in with break even, is before you make any significant investment within your business, especially around people, plant and equipment, and also with properties, so say the 3 Ps there, is what impact is this decision going to have on my break even and how comfortable I am with that. So you take objective data around what it does to your break even, and you have the subjective element of how confident are you that your business can achieve that. What would happen if you took on those investments and your business contracted 20% tomorrow? If it contracted 30% tomorrow? What does that look like to give you that comfort at night to make sure that cost of doing business isn't one of the reasons your business gets written off?